Bitcoin has seen an explosive rally after the 4-hour close above 21,500 all the way up to 22,500. We're going to discuss if Bitcoin has topped out for this move or if we will see a continuation even higher. Let's go ahead and get into it. Okay guys, welcome back to the channel. Thank you for tuning into today's video. Obviously, Bitcoin has seen quite a strong rally to the upside, breaking through the $21,500 resistance, that exact horizontal resistance and consolidation range we have been discussing over the last couple days and even the last couple weeks, talking about that November high. Obviously, seeing that 4-hour break above was the trigger for a continuation upwards to 22,500. In fact, we saw exactly that. We saw exactly what we expected, a 4-hour close of 21,500, triggering the continuation up to 22,500. We have since found a little bit of resistance at the local high in September, particularly on the 13th of September, sitting around the 22,500 to 22,750 range. We're going to be talking about the short-term price direction today, discussing if this current move, the move that we've been within for the last few weeks now, has finally topped out, and this is going to be where the continuation or at least healthy correction initiates, or if we're going to even continue higher. Before we do get into it, smash the like button, hit the comment button, subscribe to the channel. Obviously, we do daily technical analysis videos for Bitcoin, giving you guys the most objective data, the facts, and we talk about what we expect to happen in the price action and of course the macro as a whole. You can also join our Telegram channel. That will be the second link down below. We have access to all our charts, updates, analysis, information, videos, news, and so much more in here, guys. You won't miss anything important. We'll have it all in this channel. If you are interested in our VIP channel, you can get access to our VIP channel here. Updates, charts, analysis, videos, altcoin trades, Bitcoin trades. Every single trade has specific entries, targets, stop loss. Everything you need to get in and trade effectively and precise is in the channel. We also do have a group chat in here where you can go ahead and contact and talk to all of our group members and VIP members who do daily trade signals and talk about Bitcoin and cryptocurrency on a daily basis. So go ahead and get access. Now we're going to go ahead and get started with the market data, starting with the month. Obviously, how are we looking? We're up 36%. 36% is absolutely massive. Take a look at 2022. The largest percentage move we had within 2022 was a negative 37%. And that was, of course, our June crash. That crashed all the way down to 17,600. That was the largest move we saw. So January 2023 has nearly been, in terms of ROI, in terms of percentage change, larger than any move we have seen in the entirety of 2022 in terms of percentage change. Obviously, there was much more money flowing out of the market for a 37% move at the time being of June in 2022 than there is money flowing into the market currently. But in terms of percentage change, that has been the largest. Okay, so we're seeing a very, very volatile month and a very explosive month in terms of percentage change in the price. Currently, we're up 71% in 24-hour volume. Again, huge, massive increase in liquidations. 487% increase in 24-hour liquidations. Of course, the majority of those coming from our short positions. A lot of people got stopped out essentially when that Bitcoin price went over 21,500 and shot upwards. I think a lot of people got into shorts there, mine myself included. I was in shorts, unfortunately got stopped out, but nevertheless, that rally on the upside over 21.5k break made up for that tenfold. Moving on from there, guys, obviously, like we said, 24-hour volume is massively up, 71%, and liquidations are hugely up, and we are starting to see volume pump up even higher. So 2.15% on the volume currently. We are starting to see that volatility push through on the 30-day period, which again is a good indication of price action and movement as a whole. Let's talk about the DXY. So the DXY market right now is closed. The traditional markets are currently closed, but we'll discuss where they ended and how they're looking. So the DXY again is in this downward descending channel. We're still in this bullish reversal pattern. We do expect some sort of reversal at some point from this, whether it be a retest of this upper side, downward descending resistance, or whether it be a complete breakout and push into these ranges. It can definitely happen. According to our structural analysis, that is what we're looking at over here. In terms of the short-term price action, we do, excuse me, expect a drop down at some point to retest 101.3. This is going to be a very strong support zone, and the most likely bouncing zone for the DXY is going to be 101.3. So we do expect some sort of move towards down there before we find support, and then maybe climb back up to retest 102 before we either reject and go lower, or obviously break outwards and continue upwards. Obviously going upwards is very bearish for the markets, going downwards is very bullish for the markets, and currently we are seeing the DXY trickle toward the downside. Moving on to, what do we look at the Dow Jones over here? We did actually find support quite well at this local bottom. So if you remember to our yesterday video, we said, if we do lose that local bottom, that is going to be the trigger for a continuation downwards. We haven't lost it yet. We're currently still holding on. We have actually found support. We are still within this horizontal range over here. So we're not quite out of the depth of, we're not quite in the clear yet for the Dow Jones, but it is looking significantly better than yesterday. So again, we do need to see these local highs over here be taken out before we can see any sort of continuation upwards. I'd still be a little bit skeptical on the DXY, on the Dow Jones as current. Same goes to S&P 500, guys. We didn't lose that low of the support range. We didn't break down below this diagonal. We actually found support within this horizontal range over here. We do need to start clearing through these highs to start making some bullish pressure towards the upside. I'll be looking for entries potentially above this local high here. That'll be a very strong indication the market is going to flip this entire section here and rally back toward the upside, looking at a target around 4,300. Okay, so I'm going to go ahead and show you one more time. Make some space on the chart over here. Looking at the local high, guys, if we break this local high, we do expect a continuation upwards, with these levels over here being local resistances, okay? And once we break 4,100, that is when we really expect that momentum to kick in and the price to start moving quickly. So between this local high and this local high here, we do expect a fair bit of slow burn, bit of a resistance, bit of a slow burn price action. But above that range, we do expect quite a strong move towards the upside. Again, that is if we even get there. So definitely keep an eye on it. Of course, our bond yields have been dropping below our 50 EMAs, not looking amazing. The falling wedge is still active on the 2-year government bonds. So that could be a good indication that we do and will potentially see some sort of reversal to the upside. Again, that aligns with DXY being at support. One final leg down before we move up is likely, and therefore again a potential resistance and rejection for Bitcoin at this level is actually probable. So this is where things get interesting. We'll talk about Bitcoin, but all in all, guys, if you do remember back to our video, well, we've talked about it a couple night times now, but if you remember back to our video like weeks ago, we talked about what these moves mean, and more importantly, what the particular zones mean on the chart. So we had 3 zones identified, and that was number 1, the zone of reversal, and that was the distance between this area here, the breakout, and our upper resistance. Okay, this whole area here was deemed to be the reversal zone. Okay, this is where we develop a reversal. This is when a macro reversal starts developing. This was our first roadblock. This was the major reversal resistance, meaning this is the resistance which we need to break out of to turn this current reversal into a uptrend, okay, into a macro uptrend. The macro uptrend begins above this level. This is where we are in a macro uptrend, okay? Currently, we are still within a reversal. The breakout of the reversal, of course, has occurred. We have completed the continuation upwards to the next major resistance, completing that half measured move target of 22,500 exactly as expected, but we are no means in a macro uptrend yet. We are still underneath this major resistance point, the resistance point being that December 2020 crunch zone, an area of which we do need to break above before we see any sort of continuation upwards into a macro uptrend. So the reversal is complete. The macro uptrend resistance is being currently retested. Breaking through this level will result in a continuation upward to 28K. 28 to 38K is the next major resistance zone. Similar to the current resistance zone, that is the next major resistance zone. This major resistance zone, however, is going to be the bull market resistance. Breaking through this level will trigger a continuation that will eventually develop into a bull market. So 2 very distinctive levels we're looking at. This is going to be the first major point of resistance, okay, on the macro chart, not on the short term, okay? This was a short-term resistance. This resistance here was a short-term resistance. This was called a trigger resistance, okay? But this is our first macro resistance that is going to help determine the overall market trend. So a very crucial and very important level that we're currently retesting, and we're gonna dissect that today. We're talking about the short term, talk about the macro, and get into it. So looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So let's start off with the short term. We'll move over to this chart over here. What we are currently seeing, guys, is a bearish divergence print on the price action. We obviously saw a 4-hour close above. We saw the strong move up to 22,500. Actually went a little bit higher, went to 20,700. No, 22,700. We printed a possible bearish divergence here, indicating again we are starting to see bearish momentum pop up. We're seeing a decrease in this bullish momentum. We're seeing the price rise, a clear discrepancy between momentum and price, and therefore a likely reversal is in play. So looking at the price action over here, guys, is still very oversold on RSI. We do expect a little bit of resistance to be found at this level, of course, and this level does expand upward. If we take a look again, it expands to about 24,000. So there is a chance we do push higher here into this range, and we can theoretically get rejected anywhere within this range. We could push higher, get rejected, and come down. We could push even higher, get rejected, and come down. Or we can just reject here and come down. So we do have to be a little bit more cautious here, trading into a quite large and spread out range. This range over here, this horizontal resistance, is of course spanning about 4 to 5%. So therefore it is what you would call a larger range of resistance, and therefore the resistance, the point of which a reversal occurs, is going to be a little bit more harder to pinpoint as in comparison to what we saw with a much smaller and tighter range. It was much more clear validations, much more clear invalidations. Right now we have a little bit more uncertainty in those points of which those rejections and reversals can actually occur. So looking at the current price action, guys, we do see a rising trend line here. This makes up the basis of, in fact, what we could potentially deem as a rising wedge. And now this is actually pointed out by one of our members in our VIP group chat. We do have a potential rising wedge pattern developing over here. And again, if we are in a rising wedge pattern, we will usually see 5 counts. So we'll see one more retest on the bottom side before we see one more rally upwards before we reject and continue back down. As for the measured move of a rising wedge, we generally actually retrace to either 2 points. The first initial retest to the second retest, that will take a breakout point and measured move, so quite a small retracement, or even a larger retracement, guys. We can actually retrace to the first point of retest, which takes us all the way to 17,000. I don't think that's going to happen, but again, with measured moves, we generally move into our next major resistance. They're all support, and we do have a lot of layered supports and resistance along the way. But nevertheless, if it is a rising wedge formation, this is a bearish reversal pattern, and therefore if it does break down, we can expect that continuation towards the downside. So definitely keep an eye on that as we progress throughout the next few days and weeks. Okay, so what we're looking at here, guys, so on a short term, we do expect some sort of rejection here. We do have that bearish divergence printing right now on 4 hour. That could extrapolate and expand into a rejection. I do think that is possible and definitely likely. Seeing a reversal back towards the downside, we are going to be looking at that rising trend line as support. So we're looking at around 22,500. We're looking at 20,200. 22,000, 21,500, the same 2 levels, and then we're looking at our lower levels, so 20,800 20,100 and 19,500 as the next supports. For the upside, guys, again, we do have potential to move within this range. We do not expect any sort of continuation upwards unless this 23,800 is broken. So any sort of move upwards here should be still taken with caution until 23,800 breaks. Again, guys, I'm not telling you what I think. None of my videos included what I think. I tell you the objective facts. I told you guys already. 4-hour breakout of 21,000, we're going to 21,500. We're going to see an explosive move upwards to 22,000. We saw that. I've told you this entire way, guys. Bullish falling wedge pattern. Breakout over here, we're going to rally up to 22,500 max. We saw that. Nothing here is opinionated. Everything here is factual. I am simply translating what the charts are telling me. Think of me like a language translator. You don't understand a language, I'm here to translate. I'm telling you guys what the charts are telling me, and I'm expressing that to you guys what that actually means. So this is simply exactly what I'm doing. So this is what it's telling me, okay? 23,800 to 22,600 is the next current major resistance. We do not expect any sort of macro continuation until that level breaks. If that level breaks and is retested and holds the support, we expect a slow drawn out continuation to 20,800. How can we be so certain? Well, one of the tools we use when doing analysis in terms of horizontal ranges and where price will move freely and flow through is our VRPV, so our volume ranges. If we go ahead and zoom out to like a 3-day chart, we can see on the larger time frame over here, the historical trading volume between 23,800 okay, and 28,000 significantly reduced. It's significantly lower. We have a huge gap here in the volume, indicating not a lot of orders will be placed or have been placed within this range, and therefore we are more likely to push through that range with much more ease. And with much more ease, what do I mean by that? I mean, we would need less volatility and less overall volume to push that range. If we have less orders placed within that range, we will need less volume and volatility to break through those orders than if we would in a higher volume and volatility range. That is why generally when we push into ranges with high historical trading volume, we generally see more consolidation and we see slowing down of price compression than we do see when we push through areas of lower historical trading volume. Look at the current price action. Look at what has happened over here. Look at this jump, look at this drop down over here immediately after we lose the 21,500 level on the 4-hour in historical trading volume. We instantly drop down. Where do we push up again? We start building up again at around 22,400 to about 23,000, and therefore we are pushing into resistance again. We're going to be slowing down in price action. We're going to see some consolidation. We do not expect volatility and a rapid surge in price action. In fact, we expect the opposite. We expect the price action to slow down. We expect maybe a small push into this next resistance range, but again, it's going to be a slow push and it's going to be drawn out over the next few days before the price either rejects as it doesn't have enough strength to push through, or it does push through and then builds a base of support up here, which it can then develop on and from. So guys, the short term, like I said, we do expect a bit of resistance here. We actually do expect the price to come downwards on the short term. Shorts again now are much more favorable than longs. Okay, if you're trading short term, looking for shorts are going to be more favorable than looking for longs. So that is what I expect on the short term, guys. I'm going to go ahead and wrap up the video there. Now, I was going to do a community question section today. I'll leave it tomorrow. It's actually Chinese New Year tomorrow. I hope everyone has a great time. If you are celebrating, of course, I know I have a lot of people viewing who do celebrate. Have a great time celebrating tonight. Enjoy the line dancing and all the good food. And I'll catch you guys tomorrow for our next video. Thanks.